It is a presidential election year, and the rematch between former President Donald Trump and President Joe Biden will see Americans heading to the polls this November. But how does the stock market affect a voter's decision? Will investors pay close attention to the election? And will both campaigns pay attention to what's happening in the market? It's a lot of questions, great questions. And so I do want to bring in our next guest, a senior strategist at Edward Jones, Angela Korkafes, to discuss. Angelo, thank you so much for joining.
Thank you. Good afternoon.
What do you think investors, how do you think they're looking at this 2024 presidential election?
No doubt the drumbeat of elections will only get louder from here. And there is a temptation, we always see that every 4 years, to tie market outcomes to election results. But if you take an objective approach, it is really hard to find any evidence that politics is one of these long-term determinants of market performance. And certainly that has been the case over the last 8 years. We have seen pretty similar market returns for the past two administrations. And really, it is the Fed and monetary policy that has the upper hand, or is in the driver's seat, if you will.
How do you think Biden and Trump are thinking about the market as we head into the election?
Yes, I think what's been pretty obvious, certainly over the last couple of weeks, given the economic data that we have been getting, is that the U.S. economy remains very strong. We have a strong labor market. We saw that evidence of that today. But at the same time, the cost of borrowing, the cost of money, remains very high, and that feeds into some of the low consumer confidence that we also see in the numbers. At the same time, as we think about elections and market outcomes, we're talking about a $25 trillion economy that is primarily driven by consumer spending. And that is very hard to re-engineer that economy because of different policies or election results. And we get reminded of that lesson, again, every 4 years. Really, the determinants are the economy, corporate profits, and interest rates. And if we look at the data in aggregate, they are, for now, favorable.
Do you find that an election year or politics in general is the determinant of market performance?
If we go back the last 50 years, there has been only two instances, two cases where the market returns were negative 3 and 6 months after the election. And these two were in 2000 and 2008. And of course, you all remember, those 2 years are associated with either a financial crisis, an asset bubble popping, or a recession. And we don't have these conditions now. That said, we do see some volatility showing up as we get closer to the elections. Specifically 2 months before, we see the so-called fear index, the VIX index, typically rising. But if we take out the 2 years I mentioned, 2000 and 2008, the results are more consistent with that seasonal pattern that we see in September and October, where volatility rises. So it's very hard to really tie those election outcomes, the uncertainty around the headlines as we get closer to really that volatility. But nonetheless, that volatility tends to subside after the election a couple of months later.
We know that markets are guided, of course, by the broader economy. And so how do you think Trump and Biden will try to use the economy to their advantage?
Yes, I think both are going to present their own views of what's best for the country. But as we mentioned earlier, it is really, a lot of the outlook is going to depend on the labor market, which remains strong, and interest rates. And now, as we sit here today, the outlook is that the Fed is going to embark on a rate cutting cycle. But now there is uncertainty around the timing of that. And we are now in the debate, do we want a stronger economy or rate cuts? And I would argue we want to root for a stronger economy, even if that means that the rate cuts get pushed back by a couple of months or quarters.
Why does the VIX usually rise month before the election?
I think, as we mentioned, a lot of that, we see that seasonal pattern with September, October being historically negative or volatile for the markets. And thinking about when the election happened, right? The election are in November. So a lot of that is tied to that seasonality, but also uncertainty around the headlines, right? There's a lot are going to come and hit investors, and each investor is going to interpret this news in their own way. But at the end of the day, as I mentioned, it is really that macroeconomic backdrop that sets the tone for the markets.
What other sectors, Angelo, can help determine the outcome of the election? And do investors usually pay attention to those sectors?
Yes, so we talked about the broader economy, but now as we think about different sectors and industries, there are some, like, for example, healthcare, energy, aerospace, and defense, that tend to be more sensitive based on the perception of which candidate is going to win the elections. But even for those no-brainers, the obvious winners or losers based on who candidate wins, even for these those investors that try to make a bet on that, we have seen that it is really the larger macroeconomic forces that determine the outcomes. For example, looking at the last, again, 8 years, during the Trump presidency, we saw clean energy, the renewables, outperform traditional energy by a very wide margin. While the opposite, during the Biden presidency, we saw the traditional energy sector really outperform clean energy. So even though these obvious, in a way, bets or extrapolations really are not going to play out, or historically we haven't seen consistency of being able to generate this outperformance as investors might tend to think.
So the stock market, not at a record high now, but certainly has hit its fair share of records, Angelo, this year. How do you expect the campaigns to respond to that?
One side, I'm sure, is going to tout the record of a strong economy and a strong market performance, while the other side will likely focus on inflation, some of the geopolitical uncertainty around the world. And at the end of the day, we have to interpret the current environment in an objective way as investors. And where we look at the economic resiliency, the outlook for interest rates to be lower 6 and 12 months from now, and the fact that corporate profits, as we are about to head into another earnings seasons, are starting to rebound, that makes it for a relatively favorable backdrop. Yes, we might see volatility, but if that happens, that could likely present an opportunity for investors to start deploying some of the cash that's sitting on the sidelines.
Well, if inflation persists, how do you think that would impact voters' decisions?
Yes, inflation is going to be a big one, not only in terms of perception from investors, from consumers, but also for the market as it relates to the outlook for the Fed. We have seen inflation continue to be on a path of moderation, a decline, but that pace of improvement has notably slowed. And that's triggering some anxiety, some concerns among investors that the Fed might not be able to deliver the expected rate cuts. But let's think about, if we rewind a couple of months, when we started the year, the outlook was, or the markets were pricing in 6 rate cuts. Now, these 6 rate cuts have come down to 3, which is now in alignment with what the Fed has been saying. And that hasn't necessarily triggered a big market rout or volatility, because equities have really pointed and have been driven by the economic strength and the outlook for corporate profits. So as kind of we mentioned, the relatively positive outlook should not be dismissed as we think about potential uncertainty around election outcomes. And one unique factor, one unique element about this election is we're talking about a rematch. We're talking about some investors and consumers have some familiarity with the two candidates.
Angelo, thank you so much for joining an important topic for our viewers and investors alike. Angelo, thanks again.